Hi, my name is John, and we're here to learn accounting. So first of all, I'd say be patient with yourself. There's a lot of new information that's going to be a bit difficult to assimilate, but not to worry. As soon as in future videos, maybe the second or third video, we're going to start doing practical examples, okay? And it's going to become easier. But this is a very important video just to learn the vocabulary, just to learn what different things mean, okay? So please be patient with yourself and hey, we're going to learn, okay? So first of all, what is accounting? Here's the definition. Accounting is the identification, recording, and communication of economic transactions. Okay, that's the definition, guys. 4 key points here. Economic transactions, then we identify it, we record it, and we communicate. So let's see what we have here. So first of all, what is an economic transaction? It's an exchange of product or service, usually for monetary compensation. Cash, money. You buy a product, you pay money. You buy a service, you pay money. Okay? Usually, almost always. So there's an example. This pen costs $5. Well, hey, you want the pen, you got to pay me money. Okay, in exchange. Money, $5 for the pen. And it's an exchange. Products or service can be exchanged with each other. Instead of money, we just swap. Okay, it's called barter. In this example here, I will give you 20 chickens in exchange for 1 sheep. Okay, that's obviously from a long time ago, but that's how barter started. Okay, just pause for a second. Can you think of an example nowadays, very modern, where barter has become common again? Okay, it's influencers. Online influencers often use barter. I will post a positive review of your restaurant if you let me eat for free. Okay? Or send me your clothes, I'll keep them. I'll upload photos to my followers, and that's an exchange clothes for the for the photos. Okay? As far as we're concerned, in any of these videos, okay, there will always be monetary compensation. Okay, we're just assuming we pay cash. We're not going to deal with barter. Okay. Identify transactions. How do we identify a transaction? Okay. We want to record and communicate our transactions, but before that, we need to identify what is a transaction that is relevant to us. So we're only concerned with transactions that affect the entity we're accounting for. If we're accounting for a business and the owner buys a company car from business money, yeah, that's a business transaction. We're going to record it, okay, and we're going to communicate it, okay? However, if we're accounting for a business and the owner buys a car for personal use from personal money, that is not an economic transaction for the business. Personal car, personal use, nothing to do with the business, okay? It's a personal transaction for the owner. So we do not record it. We do not communicate it. Record. As soon as a transaction has been identified, it is recorded in the accounting system. Okay, guys, this is the complicated part. We're going to spend a lot of time, a lot of videos on this part of recording transactions. Just for the moment, let's keep it simple. Okay, not going to make much sense yet, but we record transactions in journals, and we get the information from maybe invoices, credit card receipts, or bank account movements. Okay, we will come back to recording transactions. There's a lot of work involved there. Okay, it'll be in a few videos. Okay, communicate transactions. It's pointless, it's a waste of time if we identify and record economic transactions if we don't communicate our results. Somebody's got to get those results and make decisions with them. And accountants communicate the results via financial statements. And we have 5 financial statements. We will look at them in much more detail in later videos. Here is just a quick summary. Income statement, very important one. A financial report that measures the financial performance of a business for a period of time, expressed as profit, income, or loss. We can say either profit or income. Okay, if we're making money, we're making a profit, we're making income. If we're losing money, we're making a loss. Just in some parts of the world, an income statement is called a profit and loss account. Exactly the same financial statement, exactly the same content, just different name for it. Second financial statement, and we will come to this later on, a statement of owner's equity, a financial report that measures the owner's interest in the business. We'll see that later on, okay, in about 2, maybe 3 videos time. Balance sheet is a financial statement that shows everything a business owns, we call them assets, and everything it owes, liabilities and equity. And it's on a particular date. This balance sheet is on the 31st of December, whatever, 2024. In Europe, the balance sheet is sometimes called a Statement of Financial Position, SOFP. Exactly the same, there's no difference between a balance sheet or an SOFP, Statement of Financial Position, just different names for the same financial statement. And the fourth one is a cash flow statement. It's a financial statement that measures the movements of money in and out of a business for a period of time. Money in, money out. That's what a cash flow statement measures. Again, we'll come to it later. And finally, the statement of comprehensive income. This financial statement gives a comprehensive view of all the gains and losses of the business. Guys, this is a complicated one. Okay, at least at this level, beginning financial accounting, you can pretty much forget about it. Okay, we're not going to see it. It includes a lot of items, including unrealized gains and losses. What that means, if you've got an investment, for example, that goes up in value, but you do not sell the investment, you've got an unrealized gain. You have an increase in value, but you haven't got the money. Okay, you've made a gain, but have not converted it into money by selling it. Okay, so having looked at the definition of accounting and had a look at just the various items, the various financial statements, now let's look at accounting categories and items. So we'll look at the principal accounting categories and the items we see in each one. Now, this is important, in a later video we're going to reinforce all this new vocabulary with practical examples. Okay. So accounting categories. And we have 5 broad accounting categories: assets, liabilities, equity, sales revenue, expenses. Okay, just accept it for the moment. Okay, we will look at these in this video and in the next video. Okay, so assets, liabilities, equity, sales revenue, expenses. Okay, thanks for watching. I hope you found the video useful. Please help the channel. Don't forget to click on like and subscribe to the channel, and see you in the next video. Thank you.